Let us know you see our charts and hear my voice. Hey, Ben, good morning. Casey, Don. Hey, Fred, Glenn, KG. Hey, Mark. Hey, Oscar, Pedro, Peter. Hey, Timothy. Hey, Warren. Good morning. For those that are joining us on the outside, welcome. We're getting all set up here. This is price action trading in the S&P 500 E-mini. We're here during the morning session. Right now it's 9:18, Tuesday, February 23rd, 2021. If you're new to our service or new to the S&P 500 E-mini, make sure you have a S&P 500 E-mini chart up and ready to go. Notice Sol's two time frames for the S&P 500 E-mini, a 5-minute and a 1-hour chart. And he has been paying more attention to the movement in the bond as it relates to the counter move in the S&P 500 E-mini. If you're part of Sol's monthly, thank you. If you're part of Sol's intensive, thank you. If you want to hear about Sol's monthly or intensive, raise your hand. When Sol pops in, should be in a couple minutes, he'll start the morning session. He'll talk about his levels and zones, and then he'll give them out to you. Be prepared to write these levels down. These are levels in the S&P 500 E-mini that he calls zones. These are areas where he's very interested in seeing how the market behaves and whether he should put a trade on in those areas around those levels. Everything is fluid based on trading. We're not big fans in the map it all out before the cash open or the night before or the day before. We like to see what happens right around the cash open, and then we move on from there. The market gives us our clues based on how we're going to handle the morning. And again, if you have any questions during the session, don't hesitate to ask. If you have some questions before the session, don't hesitate to ask. Sal loves questions. If you need new trading software or would like new trading software, like to hear about new trading software, let us know. If you are without trading software and you need to set yourself up to trade the S&P 500 E-mini, let us know and we can help you with that. So make sure you join the family. In other words, sign up for Sal's monthly. It's nominal. You know, on a good trading day, should be done by 12 noon or sooner. If you're not, let us know. The other thing to quickly mention is that Sal is working with traders both publicly and privately. So he'll be in this service talking, interacting, and then he may go in the background. You know, it's also important to know that Sal is trading, so he's at risk. And as you know, there's a lot goes on that goes on when you're at risk. So if his voice drops off or for whatever reason, just know that it's for a good reason. If you find that there's an issue with Zoom, you know, certainly let us know. You know, I think I did an update in Zoom today. You know, I tried to update it, but sometimes, you know, there is no update. So it's not like they say you're out of date, you know, you need to update. Hey, Fred, you can't see the charts? Maybe come in and out again. Try that. When Sal pops in, he adjusts the charts anyway, and that may give you the charts. That happens to me sometimes. It's just the feed or the connection, something screwy between us and you. And I've had it on my end happen to me also. But when he comes in, he enlarges the chart, then generally I have to reduce it and the chart comes in again. But we are here, the chart is up. I can't refresh the chart, I don't think. If anybody knows how to do that, let me know. Or I'd refresh it for you. It's funny, I was watching I think it was a sci-fi movie, but it was on Netflix, and it was about it's called either Dark December, but it was out in time, like 2039 or something, and how most of the planet lost all its power and internet, and they went into the Stone Age. And then I don't know, I watched like a couple episodes of it, and it was leading into the the one place that hadn't fallen behind because theirs didn't go off. But it's amazing what we can do with today's technology and technology coming up.
All right. Good morning, everyone. Can everybody hear me all right? All right. Thank you. All right. Let's give you our levels for this morning, and we'll see where that takes us. Our pivot this morning is 38.47. 38.47. Resistance above at 54, 60, 69, 76, 85. Support below at 40, 35, 28, 22, and 14. Pivot 47, support 40, 38, 28, 35, 28, 22, and 14. Resistance on the upside at 54, 60, 69, 76, and 85. All right, we have Powell is going to be talking today and tomorrow and being asked questions by Congress in front of the both financial committees of the House and the Senate. So this is a extended kind of F day for us, and you have to be a little bit careful. F day stands for Fed, not anything else that your mind is thinking about. But we try to stay away from that thing that your mind is thinking about because we don't like to get in the market. So we are mindful of the fact that he's going to be in front of Congress answering questions. His opening statement will be provided and reacted to, and then the Q&A section from the members of Congress. Today he is in front of the House Financial Services Committee. Tomorrow, today is in front of the Senate Banking Committee, and tomorrow is in front of the House Financial Services Committee. So he gets to talk to the senators today and then to the Congress representatives tomorrow. So it's a fun-filled couple days here of Fed issues. Getting ready for Fed Chair Jeremy Powell's semi-annual monetary policy testimony before Congress, which will take on additional importance this time around. It always takes on importance as investors size up the recent run-up in bond yields. Powell will answer questions from Senate Banking Committee today and appears before the House Financial Services Committee tomorrow. He is expected to reaffirm his commitment to an alter easing monetary policy, as well as the need for more fiscal stimulus to support the economy as it emerges from the COVID-19 pandemic. Okay, this is why the market has been floating to a 39 handle and staying pretty much positive. The Fed has a run historically loose policy over the past year, lowering its benchmark borrowing rate to near zero and buying at least $120 billion worth of bonds every month, 7% of its GDP on an annualized basis. That's atop of a series of lending and liquidity programs implemented to battle the coronavirus crisis, while Congress has approved trillions of dollars in fiscal stimulus and could pass another $1.9 trillion by the end of the week. All the stimulus measures have helped boost expectations of faster U.S. growth and inflation, recently driving U.S. government bonds, particularly future out on the curve. So you can see how we've been talking about bond yields over the last couple weeks here, and how it might be affecting the market. So you're weighing looser, throwing all kinds of money into the system versus inflation, which is going to be the one that wins. I don't know. We'll see. All right. If you welcome some of the new folks that are here, the levels that we just gave out, if you missed them, we're going to print them. If you look at the chat box area, they'll be in there. And what they are is just a guide for our day. Nothing's etched in stone here. We use those as a guide to find these opportunities to trade. We're scalping the market because we don't believe markets go straight up or straight down. We use these as a guide initially, and then once the market paints some bars, we use the price action opportunity the market presents itself or gives us, and be able to trade off of those opportunities as well. So between the price action opportunities and the levels that we give out, plus other opportunities that occur once the market paints some bars, we put together a methodology that allows us to scalp the market. Depending on volatility, today it looks like about 2 to 3 points on our opportunities. So consequently, that's what we're trying to do here, is to scalp these markets for about 2 to 3 points. Usually we get about 4 to 5. Again, that could be more than that. It could be less than that. Opportunities to trade during the course of the day. We focus more on the morning hours here because it gives us good opportunity as far as ebbs and flows are concerned. The volatility is there in the morning hours. It seems as the day goes on, the trade becomes a little bit more different. Doesn't so much align with some of the work that we do, but the levels are there all day. So you don't have to, those are levels that we can use all day. And I would focus more on those in the late afternoon versus the price action because it gets a little bit more slippery and less people trading in the late afternoon trade. So it's a little bit different. But so today, given the fact that we have Powell in the background, is going to be an exceptionally tricky day to try to stay out of trouble. Keep your stops in no matter what, right? I mean, we have to try to make sure that happens because, after all, we don't want to get ourselves in too much trouble given the circumstances of the day as we come down here to our 40 level. Again, whatever you do, keep your stop in. And we'll see what it wants to do down in here. And then you'll be able to take the opportunity if it presents itself. If not, don't get yourself in trouble and just keep your stop in and just let's see what the next opportunity may hold for us. All right, so we're drifting slowly down here, hanging around the 40 area, trying to see what it wants to do. And again, make sure your stop is in place so that you don't get yourself in trouble, especially on an F day like today. I mean, that's the one thing that is annoying and also frustrating sometimes with these Fed throwing in their 2 cents worth, whether they be during a Fed release of their announcements of interest rates, or today, which is even worse, where he's going to be talking all day. So that's what unfortunately that's what we have to deal with when he is when they're in the background. It's not our favorite trade, but keep your stops in so we don't get ourselves in trouble, and we'll see what happens from there. All right, the market is working this 40 area again. Give you a couple chances here if you didn't like the price action to kind of scratch or get out of a little bit of it, and slowly drifting. It's not going down anywhere, but just keep your stop in there no matter what. Just keep that in mind. All right, well, that was nice. Okay, that's better. All right, nice. Again, if you keep your about 3 or 4 points, 2 or 3 points, hopefully you are able to stick with the trade here a little bit, and you got a little bit of a nice rotation off of the third at a 40 level. I just had to manage it there just a little bit. It didn't want to go. I mean, it was there, but it was like teasing you. Just and then all of a sudden, somebody decided he wanted to buy some, cover some of his levels here, and then the market popped here for us. So it gave us a quick little opportunity there against our 40 area. Again, we had, like I said, 3-point stops. Hopefully we're able to stick with it and get a little bit of a rotation here off of that 40 area. And now next level on the downside we have is down at 35. Again, market seems a little bit slippery. You always get that extra push, that extra volatility in the first couple bars. Some of our traders like to trade it. Some of them like to hang loose for a little bit until the market paints a couple bars. We have consumer confidence coming out here at 9 o'clock on Richmond Fed coming out here at 9 o'clock. And also, Powell testifies before the committee, and I'm not sure if his statement is out yet or they'll release his statement at that time as we quickly come down here to the 35 area. So he's going to have his opening statement that will be released like quickly, and they're going to trade off of that. So this is obviously a Powell trade right now, right? Remember, it's a F day, right? Unfortunately, it is what it is. Wish I could make it up, but it's not. It is an F day, and that's why we tell you to stick your stops, is to make sure you stay with your stops no matter what they are, and look for the opportunities. If you don't like the opening first couple bars, just hang loose and just kind of wait for the market to settle down here a little bit to give you a better chance when things calm. But right now we're about, again, like I said, 2 to 3 point stops with they could change. I mean, if the markets get a little bit more crazier or the volatility gets a little bit more involved, you might have to extend those stops a little bit. We just you never know, right? You never know what the opportunities are going to present, how the market is going to, how much volatility is going to be created every day. So we have to take that as it comes. So we get a little bit of a pop here up to 37 area off of our 35. It's like the 3 points is the key today to staying in the game, or maybe adjusting to the lower end, depending on how you're entering these trades. Definitely have to work them today a little bit. Sometimes it's a little bit easier, sometimes it's not. Today is one of those days where you have to work them and act fast when it gives you a chance either to scratch them or take a quick profit, right? All right, next level downside we have is the 28 area. So again, this is the initial burst here off of the morning. And again, not something that it is whipping around today. All right, they got filled there right at 28 for you guys if you did get in there. And a nice quick 3 point rotation off of that level. Gotta be fast here today. This is it. All right. All right, so nice little pop here off of our 28. Again, it's just a matter of if you're trying to stay long here, if you have multiple contracts, it's always one of those tough little plays when you're going to get a good bounce off of one of these levels, just a matter of which one. As we came right down to the 28, took no heat on that one, and the market was nice that time, gave us a quick opportunity there. But it's fast. I mean, you got to react really quickly here, because otherwise, then you got to put basically to get out of these things, especially if you're scaling out, you almost have to have the orders in place before it gets there, because otherwise it's moving really fast this morning. Volatility is back. Maybe if you want to increase your stops there to 3 to 4 points, if that's a little bit more reasonable at this moment. So as we came down here to the 28 and get a nice little push, I'll give you a couple more levels on the downside here, just in case when you go through some of these that I gave you. We got 28, 22 I have is the next level on the downside, 14 below that. Then we have 07, 3800, and 93. So below the I gave you up down to 14. We have 07, 3800, and a 93. So those are the levels that we have underneath the initial opportunities that we gave you. As we continue, pressure here is on the market. Could you have gotten short? You basically, and maybe you just had to get short if you wanted to. Maybe below the 44 area could have been a selling opportunity based on the price action. Now we let the market kind of dictate how, what, and when we're going to trade. We don't like to guess. And so the only, we kind of let the market indicate where and when we're trying to get short here. So the next level on the downside we have is down at 22 support. As you can see in the chat box area, if you look there, the levels are printed so visually you can see them. Again, we don't know which way the market's going, so we give you a set of levels, and we have some more. We have plenty. Both sides. All right, so we continue having a little bit of pressure. I mean, the interest rate thing, Powell talking today. Remember, it's an F day. It's always, we have couple numbers coming out here at 9 o'clock. Powell's testimony, initial statement is going to be released, and then bullet points will be from that. We also have a couple numbers coming out here, not consumer confidence, Richmond Fed. So that's it in about 15 minutes. So on top of all this extracurricular Fed stuff, we have a couple fundamentals that are going to be released at 9 o'clock. Whole bunch of stuff today, keeping us busy, at least this morning, which we like. We like to stay busy in the morning. That's where we focus most of our trade in anyway. The resistance right now would be around the 43 area. All right. Market continues to be under pressure here as we come down to our 22 area. And so a lot of quick moves here for us. Market's moving really fast. You got to be quick on your toes, basically. All right, then, Mark, if you did all right, then just go back to bed. Good job. All right, nice little rotation there off of our 22 area. You got filled out on both ends, and you're getting a nice quick 3-point rotation here off of that. All right, so that was that level worked out all right for us as well. I mean, unfortunately, we got to just be quick. You got to be quick here. I mean, that's all I can say. You got to have your orders in place before or after. It's just a quick rotation both ways. You cannot just go in there. You can't put your order in there after it's gets there. Just the way these markets are moving around, you have to have your orders in place. You have your exit strategy in place, and you're just moving quick. Not giving you a second chance is what I'm trying to say. And so again, we understand, as long as you understand what the market is doing that day and how to react to it, you have to adjust. Sometimes you can take your time and go on and putting the orders in. You can you don't have to rush. You can work it a little bit. Today it's a totally different trade as we continue to downtick. A nice big order there at the 20 area, which will probably get taken out. Market always goes to the orders. They see that big order there. It's 700 bid down there at 20, and then all of a sudden somebody's going to take it out. Oh, they took 500 of it out. It's just the way it works. All right, next level of downside we have is down at 14. Welcome to trading. Well, you also got to remember that nothing's bigger than the market, right? I mean, somebody can move the market around, but 500 lot, 1,000 lot, especially when there's volatility, it's just not. It's not going to move the market that much. Not today. Initially, it might. You'll get these pops, but you're not going to be. When there's volatility, it's just like if you. Market, there's nothing bigger than the market. Just remember that. You can have all the Goldmans in there and you can get the Goldmans in there to push the market around every now and then, but at the end of the day, there's nothing bigger than the market. I mean, it gets a little bit oversold or it gets a little bit overbought, you're going to have a rotation one way or the other. Looks like it's a little oversold right now, but we don't, we're not going to sell it now. We're trying to find areas where we can get a little bit of a bounce. Got down here to 16 and then bounced up nicely. We had 14, and it's okay if you got down to 16 and you're worried about it. If you want to adjust a little bit, you can adjust a little bit, but see what it wants to do is it quickly rotates back down here to the lows. They're really concerned about what Powell's got to say and not. And interest rates and everything else that goes with it. Can we repeat the levels again one more time in the chat box area, please? There they are, as we quickly come down here to the 14 area. Again, whatever you do, keep your stops in place. We are definitely opening up the floodgates right now for whatever reason. And I'm sure the funny part about this is that that, not the funny part, it's just, that is what it is, but that Powell's watching this before he starts. I'm like, oh God, look what's going on in the market. Not saying he's going to say anything to change the trajectory or nothing. I'm just thinking out loud. Man. Ooh. Yeah, really under pressure here. Quickly coming down to 7. Yeah, like I said, you got to extend your stops here with the volatility, maybe even go to 4 to 5 points. And then, keep that profit target in place as well. You're also trying to get the same profit target. And the only reason that you're extending your stops here a little bit is because to add to slippage, because you're going to get some slippage here. There we go. There's a nice little quick rotation there off of the 7 area. Very nice rotation there off of 7. And this is what you're waiting for. You're waiting for this one right here. This is a nice little pop up here. All right. So nice little rotation there off of our 7 area. Again, even if you get stopped out, you got to jump back in, right? Especially when we get into volatility, right? It's okay to get stopped out. You're going to get opportunity no matter how you slice it. And remember, we said we were extending our stops to 4 to 5 points now because of the added volatility. And you're going to get the movement both ways. So if it's too much volatility for you and you can't handle the heat in the kitchen, that's fine. Just hang loose. You're going to get, things are going to slow down a little bit and you'll get more opportunity if you're trying to stay long. It's very hard to stay long this stuff because of the quick movement. But we did, you get those opportunities where you do find a good entry point, and then you try to milk it for a little bit with a couple extra ones that you have left over. If not, that's fine. If you're just trading one lots, you just take your profits one way or hit your stops. That's fine too. All right, nice pop here off of our 07 area there. We got down to 475 and quickly rotated off of it. And this is where sometimes it just pays you to have a couple left over, and you got just to try to take as much out of this one as you can. And you could this even if you had one lot left over, this makes up for a lot of trades, right? You got a 20-point rotation here in this 5-minute bar, 3-minute bar. It's 3 minutes, and you got a 20-point rotation. We have 5 minutes, but it's been 3 minutes since it's went down there. So this is how quickly it's moving today. Yeah, we've been waiting for this volatility for a while. At least we're getting opportunities today. We can't complain. We're getting the opportunities both ways. I mean, obviously, you got to stick. Like I said earlier, we got to stick with our stops no matter what. And that way it keeps you out of trouble, especially if we got to run over. And then you get the nice little entry point down there at the 7 area, and you can ride this one a little bit. Yeah, again, I don't know what exactly, how the market's going to react to any of this stuff, or any what he's going to say or not say. All we can do is trade what's in front of us. Like I said, right now the resistance would be still around the 43 area. And if you think we can't get up there, don't bet on it. You could, the way it's moving around. So just be patient if you're looking for a place to short it. I mean, right now we're just we're again dipping our toes into support areas that we have. Let me give you a couple more levels in case we really decide to fall out of bed here below 93. So we got 07, then 3800, then 93, then we got 82, 74, 67, and 60, in case we really decide to, in case they don't like what he's saying. But there's no, again, I doubt that on the verge of him talking, that they're going to let this thing completely go bonkers. But I don't know. I'm just going to give you some levels here below 93. Then we have 82, 74, 67, and 60. All right, so nice little rotation there. If you're trying to stay long, have a trailing stop. Your trailing stop would probably have to be about 5 or 8 points, right? Unfortunately. But, it is what it is. Again, it's just everybody's got different risk tolerances, so it's not doesn't mean that everybody's long here or everybody has to be long. As long as you take some profits and this is any extras that you have, you're not going to lose any money on the trade, right? But just potential money, but not lose money on the trade. And if you're just trading one lot or 2 lot, then you just can, All right, there, HD. And sometimes sometimes when it settles out and you finally got flat, it's good to take a breather. So there's some more levels on it, support levels on the downside as they're in the chat box area. I got stuck. I couldn't say it. All right, so there you have the rest of those levels that we just gave out. I know that's a lot. But we don't know which way the markets are going, right? I wish I could have told you we were going to open up and sell it, and about 15, 25 minutes later buy it for, and then walk away for the rest of the day. Some of you are still going to walk away for the rest of the day. We do have a couple numbers and his opening statement. The bullet points from his opening statement will be released in addition to the couple numbers that we have. And again, the resistance would be around the 43 area right now. While the 2-year is unchanged for 2021, the 5-year has risen a quarter percentage point to 0.61. The benchmark 10-year has been seen as jump 44 basis points to 1.37, an area which where it has not been seen before the pandemic, while the 30-year rate has climbed 54 basis points to 219. So you can see here a little steepening of the yield curve, 44 basis points on the 10s to 54 basis points, and not steepening, but expanding the yield curve a little bit, which we haven't seen that in a while. ECB President Legrand even flagged the movement on Monday, saying that she's closely monitoring the evolution of long-term nominal bond yields. So if you think that bond markets is not important, it always comes back to the bond market. Somehow. I don't know why. It always does. A series of disappointing weekly job claims and a recent monthly jobs report have pointed to U.S. labor markets as still under considerable strain due to the pandemic. That may lead Powell to emphasize robust stimulus measures, which would be typically embraced by investors. But some are now painting the Fed's situation as caught between a rock and a hard place. Bond yields continue to rise. In response, the Fed may be forced to tighten policy too quickly, while a complacent Fed could pose overheating risks that may destabilize the economy over the long run. So there you have the dilemma that they put themselves in with just printing all this money. So if you don't do anything, forced to tighten quickly, while a complacent, so if you tighten too fast, that's going to slow down the economy. If you do it slowly, you pose the risk that destabilizing the economy over the long term. So this is where we're at with the Fed. And the reality of it is, you know what? It just gives us reason to trade. That's all that is. So we like destabilization of everything, right? Calmness, everything going hunky-dory, Do we like that as traders? You need craziness to give you opportunity, right? That's what we're getting. You don't need the, nice, serene. You need some craziness. You need like uncertainty. You don't know which way it's going to go. That's what markets react to. We get this nice slow trade. You're like, this is boring. Might be good for your portfolio, but as far as a trader is concerned, on an everyday basis, that's not what we want. We want craziness. I know it's kind of counterintuitive, right? But as traders, on an everyday basis, you want craziness. You want uncertainty, right? That's what you're looking for when you're trading, because that's what makes markets move. That's what's going on here. All right. Market is a little bit on edge, doesn't know which way the Fed's going to do what it's going to do. Again, would I trade? You're asking me a question. Those levels worked the first time. Right now, I got no opinion on the levels besides the next level on the downside we have is down at 38 even. If you're trying to catch something here, it's kind of tough. We already traded those levels. So I wouldn't, again, this is kind of this area right here, this rotation back, and, this is like a no trade. The only thing I'd say is I got some resistance up at 43. And if you're looking for a little bit of support, maybe the 14 area, if you're getting a little, if you're dying to find support below, maybe 12 to 14 area. That's right. Once you go through a level, it's not as strong. It doesn't mean that it won't work again, but it's not as strong as it was initially. That we're not looking at it because obviously it tested it already, right? We already tested it initially, and as you can see, kind of did what it did around it. So as far as support is concerned, right now the only decent support you'd have is between 14 and 12, and then down at that spike down at if it goes and retests that low there at the 475, and then below that, then we have our level below that at even. So I mean, I would just wait for the even. We could go retest those, but that's not, it's not our favorite play. All right. So bonds here, look what they're doing. All of a sudden they're waking up to the downside, which means higher rates, which means that's what the market's concerned about, nervous about. So that they must be coming out with his, remember the numbers are out, right? The numbers are out. That's why we had the little push to the downside. I forgot to mention that initially, but we didn't have anything on at that point. But the market is reacting to his comments, at least the bond market is right now, and so is the S&Ps, as they are welcoming his comments, his opening statement anyway. Definitely not happy. Bonds not happy, and S&Ps. We're finally getting a little bit of inverse relationship trade here. Again, this is because of the release of his statements, probably, and this is trading like an F day, right? I mean, I hate to say this, but we are trading. This is absolutely an F day. F day standing for Fed, and especially now that he is gave his opening statements, his bullet points of his opening statements are out, and now eventually after this, they're going to basically ask questions of him, which could create some volatility if he gives the wrong answer, if he takes the wrong stops and pauses in the wrong, takes a breath in the wrong place. They're going to assume that he means something when he didn't, and you gotta be careful, right? They used to say when Greenspan, they always had Greenspan would walk into these meetings and he had to carry a briefcase, and so they said if he carried it in his left hand, it meant something when he walks into the building. If he carried it in his right hand, it meant something else. Back in the day when you actually walked into a building to actually give your testimony. Now you just get in front of your computer and from the top, from your waist up, you got to look like you've been. Yeah, you're solid. Yeah. So, all right. So we can see here bonds reacting to his statement. Like I said, we got resistance around the 43 area. That's where, if you're looking for some resistance, that's where I'm looking at. Otherwise, I'm not really trading this middle stuff right here. It's a little choppy. It's a little unknown. We had nice opportunities there with our levels. I think we had to really react quickly to some of them, but I think we only maybe got a run over on one. But we were suggesting and telling you to keep your stops in no matter what, because we knew this might happen, and you got to be ready for the opportunity when it does go and bounce off of one of our other levels that we gave out, that we're going to be situated perfectly for that, and you can take out of it as much as you can. The tech sector looks poised for another down day, fueled by fears about inflation, rising long-term rates that could lower the present value of future earnings, undercut arguments for evaluated valuations of high-growth tech stocks. NASDAQ slipped 2.5% on Monday, while futures contracts linked to the index fell 1.5% overnight. This is before the market opened. So we are, and that's there's your, in one line, that is what the market is concerned about. Poised, fueled by fears of inflation for rising long-term interest rates, and that could lower present value of future earnings, and undercut arguments for elevated valuations of high growth tech stocks or any one of these companies. But again, if you've been waiting for some of these stocks to come back down into the buy area, the route weighted on some of the best plays of 2020 as Peloton plunged 10% on Monday. Tesla tumbled 8.6%. So I've been waiting for those. If you're trying to buy some of those stocks, this is finally giving you a chance. I mean, I'm not a stock person here, so let them. I'm saying if you've been waiting for them, don't not telling you to go buy them. Bitcoin retreated below 50,000. Actually, it's down 13% this morning, if I'm not mistaken. It was down a lot, and that goes to me telling you yesterday how these companies are going to. It's down 14% this morning. It was. I don't know what it's at right now, but it was down 14%. So this is why I was suggesting yesterday when telling you that they're going to start buying these cryptocurrencies or accepting cryptocurrencies for cars and whatever. I mean, you're not going to sustain. These companies are not going to receive money and then the next day be down 14% because the Bitcoin market is down 14% the next day. I mean, it's just not going to happen. I mean, it doesn't make any smart business sense to go pay one Bitcoin for 50,000 for your car on Monday, and then it's worth 44,000 the next day. So I mean, these people are not silly. I don't know. Maybe they are. What do I know? What do I know about this crypto thing? All I know is it's just too volatile to be used as currency. But again, I never understood the market anyway, so I don't want to give you any advice there either. But I'm just thinking out loud. That's all I'm thinking. Since this is what I do here, is think out loud because nobody else talks to me. All right, let's see here. So again, we got resistance around the 43 area. If you were looking for a little resistance area, could I have told you we were going to bounce all the way up here? Nope. I could not have. Could you have told me if you knew? I wish you would have shared it with me. All right, we're continuing to rally here. And remember, he is talking right now. And he could create some volatility. Like the bond market came back. They're even moving around. But again, the only problem with that bond market is just more one-way trade. So it comes a little bit. I mean, at least we are bouncing around in the S&Ps. You don't get too many bounces. Once you start going one way in the bonds, you just go one way. It's a tough little trade there. Tesla is down to $670 per share after touching $900 in January. So I guess Elon Musk is not the richest man in the world anymore. So, in case you were worried about that. All right, market continues to uptick here a little bit. Got resistance around the 43 area. So I think they might have been a little bit oversold there. Okay, we're coming right up here to our blue band. If you're getting in, maybe you're scaling in a little bit differently here, depending on your, on the volatility day, right? You're scaling in a little bit differently than you normally would on a normal day. Get up to 41 and rotate it down here. Again, you're waiting for these different levels to get in. Waiting for opportunity is very important, especially when there's volatility, because if you get in, you're trying to maximize your entry point, so and then maximize your profit. And obviously, a little rotation there to the 41. We'd like to get 43, but did not get right up. They got up to 41 and then a quarter. Again, how you enter your trades is important. Scaling in, especially. I'd like to see 43, but obviously it did not get quite up there. It came off here a little bit. Again, it doesn't change the fact that it did go up to our blue band there. It came off. So because I said 43 and we got to 41 doesn't mean that now the 43 is not as solid as it was. Just like I said, I would have liked to get 43. We got up to 41 and change. So if you're waiting for 43 and you didn't get it, my point is that probably have to adjust a little bit more. Maybe look at the 47 area, which is our pivot. And I got to remember that once he gives his opening statement, he's going to have his Q&A, and his Q&A could be just as volatile as the anticipation of his opening statement, right? So again, if you made some money this morning and if you're good, just be good with it. Yeah, the 7 area was a nice little entry point there. That's for sure. But if you're happy with it, call it a day, because this could get a little bit choppy the rest of the day here. Well, we got to 41 and change instead of 43, unfortunately. Maybe some of you did happen to jump in when you saw it kind of stopped up there. I don't know, depending on how you're trading. If you adjusted your entry point there just a little bit, maybe you scaled in a little bit differently. Remember, since we expanded our stops, your scales are not going to be like a half a point above or below. Maybe they're a point to 2 points above and below, because you have to take into consideration the volatility. That's a consideration here when you're expanding your stops. And again, we're expanding our stops. By the same token, you're also expanding your profit targets as well. So it's not like it's just a one-way street here. So again, if you've made a little bit of money this morning, given the fact that it is an FTA, and not only that, it's not going to happen. It's not only today; it's going to be tomorrow too. So, Obviously, he's got to say something dramatic today in front of all these questions, because they're probably going to rehash some of the same questions. And not only that, but they'll probably, yeah, I mean, they'll listen to some of his answers today and then press him on some questions tomorrow on the same answers. So we'll see. All right. Again, as traders, we're not trying to find the direction of the market. We're trying to scalp the market. You're trying to take advantage of ebbs and flows that the market might create for us. And that's what we're trying to do here today. Obviously, we have to withstand some of the initial move that the market created. And we did that, with stops and also with profits along the way, because it did give us some opportunities there. Even though it was going down, we had some decent levels that we were able to get into and scalp the market. And again, like I said earlier, we're looking for ebbs and flows. So we're looking for bounces off of certain areas. And markets don't go straight up or straight down, but it just fluidly went down before. And now things have slowed down a little bit. So again, but again, this is what you do as traders. You're trying to find these inflection points that the market will give us an opportunity to trade. Anybody have any questions? Please feel free to jot them down in the chat box area. That's a good question. Peter, are you here? All right. Are you available to have class later on this afternoon? Fantastic. That's great. Let's see. Okay, so yes, we will have class later on this afternoon at 12 Chicago time. So we, for those of you who are new here, we have an education course that we offer to take advantage of the opportunities that we have and to teach the levels that we how to find the levels and how to trade them and the methodologies that we have. We do it in our and using the live charts and also right at during the course of a day in this venue. And so if any of this stuff interests you, if you want to take your trading opportunities to a different level, we can obviously help you do that. I don't. Usually if they're going to be here, English is probably something that they should we should be talking to. And I mean, otherwise, we can't help you. All right, fantastic. All right, who would have thunk that we're going to come right back up here to our pivot, right? That was a little bit ago, like maybe an hour ago, half an hour ago, but we are. And again, just a matter of being patient, waiting for the opportunities. If you did scale in there against the 47 area, hopefully you did. Again, we're not going to be perfect, right? And the way you're scaling in right now, you're at least minimally a point above and below, because you can't, I mean, a half a point is not going to do it. And not with the volatility. So nice little rotation there. If they got up here to, well, hopefully you got in there at 46. And a nice little rotation off of that level. Okay, so we are getting our opportunities here against our levels that we talk about, and being patient. Maybe you make an adjustment. I said 43 initially. If you didn't get 43, if you didn't get 40, we got up to 41 and change. If you didn't do that, then hopefully you got in here against the 47 area. I mean, when I say a level, it's an area. It's not like, again, we talked about the how you trade around that area, how you scale in. Those are all parts of the discussion that we talk about. And I mentioned it a couple times when I'm not perfect. The 707 we had below got down to 475. Still, we're not where it's an area, right? So, especially with the volatility that's in there. Well, because the averages on the bars are different, so the blue bands react differently because the averages on the bars are different. So the blue band average on the bars and the hourly average on the bars are different than the 5-minute average on the 5-minute. That's why the blue bands are got different areas of interest. And you put yourself in give yourself a 3-minute or a 3-minute bar, then those things would be different even more. So it'd be different than 5. All right, if we're going to hold here, it's got to hold right in this area here. We get below, well, it's getting below. I was going to say get below 38. You don't want to be long anymore. It's a little bit of a buy here. Get below 38. If you're looking to get long there, if you want to get long here, below 38 out of any longs. Now we're looking at the next level on the upside we have is all the way up 54. Could you imagine? Look what we've done here. We are just ripping through some of these our levels. I don't know if we're going to get up there or not, but it's got to hold here, and then we'll see what happens. Obviously, volatility is there, and like I said earlier, you have Powell who's talking and answering questions, so anything could happen. Right? If it was setting up to be a little bullish, and he said something that created negative downturn, that's why you keep your stops in, right? So all these things, there is a reason to our madness. That's what I'm trying to say. Or logic to our madness, something like that. All right, again, if you did buy him down there, again, we gave you an exit strategy below 38. Got down to 39.40 and popped right back up here. So we're giving you a little buy opportunity there. I gave you your exit strategy, and you could have minimally 2 points, maybe even less than that, if you did buy him. And a nice little push here off of that little support area. So again, market, we were down, a little downturn earlier. We a little bit bullish as long as we stay here above the 38 area. Nice there. Nice trade, Padro. I'm glad somebody's listening to me. It's very tough to do the job when they say something and I don't know if it's working or not, or if somebody's listening or not, or if you're taking a trade or not. I don't know. Like I am like, I mean, and again, anything I'm saying is taught. We're not. We want you to figure these things, these opportunities out on your by yourself for your reasons, and we tell you what the reasons are, and you have to try to find those trades and recognize those trades, initiate those trades, and trade them accordingly. So again, you could say the same thing now, but anything below 37 out of any longs. All right, again, if you did want to get along down there, I'll give you an exit strategy. Again, it's just being patient and waiting for the market to set something up for you in case you were looking for it. And obviously, no, the trade earlier this morning with our levels were all. As I said at the beginning, we look for 4 or 5 trades in the course of the day. I think we could have you're easily at 8 or 9 right now, depending on how aggressive you want it to be. And this kind of balances out some of those days when things are not when we're slow and we're not doing much and being patient and maybe getting some. This is the balance of that craziness. All right, nice trade there, Robert. That could be it for you today, I think. No, I appreciate the feedback. It's good to see the people listening. It's very tough on my end here to not know if I'm saying something that people are taking advantage of it or getting stopped out or adjusting. These are all things that I say over and over again, but those are things that are important. As a trader, you have to keep. Those are things that you have to keep on doing, especially when the markets are moving quickly. I mean, they're just it's a very fluid situation. All right, again, we're trying to keep you a little long here. Next level on the upside we have is at the 54 area. We gave you an exit strategy below 38 and below 37. Gave you a couple dips back down to the 40 area there to buy them. And again, those were the stops were, I mean, the exit strategy were there. It was just a matter of, did you want to, take advantage of it? And you could, 3 points, 2 points, depending on where your entry point was. That's a acceptable amount of risk. No, that's fine. You don't have to type your response. I don't need responses when we're moving around. But I appreciate your feedback. How's that? All right. Market is now getting to the choppy point here. So again, if we stay above the 37, 38 area, we might, uptick there to the, maybe get a chance to test that upper levels that we have. We have 54, 60, 69, and 76. That would be one hell of a turnaround if we start attacking those levels today. But it makes sense because it's an F day. I mean, nothing surprises me on F days. Nothing. So there you have it. If we start rotating to the upside and start hitting those upside levels. All right, again, we are going to have a class. So we've had a very busy morning, right? Like I said, this kind of day makes up for those days where we're just like twiddling our thumbs here, waiting for something to get triggered. But today, like I said, we're up there. A whole bunch of trades and opportunities. The resistance we have at 54. That's our next upside resistance that we have. Now you got to look at the upside resistance here to look for our levels on the resistance side. So here's some of the statements that he made to maybe turn the market from complete crashing to a little upside. Powell said that the following periods of when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. All right. Powell says long way from our goals, further progress to take some time. So basically saying that don't worry, we got a long way to go. Even if our interest rates go up, they're not doing anything. That's basically his story there. All right, that's basically what he's telling us. As we quickly come up here to the 54 area again, very not surprised at the move here, as we're trying to now keep you a little bit bullish. We are turning a little bit bullish on this market. And like I said, it's kind of crazy now. All of a sudden, we're going to start rotating back up to the upside here. But it seems like that's what we're doing. Again, if you don't like the action around a level, just exit, kind of, get out of it for a scratch. And it's giving you that opportunity here. As we're hitting some stops here, like these shorts that were short earlier, are like, what's going on? I had them, and now look what's happening. I don't believe this is happening right now. That's what the shorts are saying right now. But then again, your typical left day. Not a surprise, as far as I'm concerned. All right. Again, we said we were bullish on the market, trying to keep you a little long, looking for the upper levels. The 60 levels, the next opportunity on the upside. And that's why we said, if you made money, you're happy with the money that you made, just, you don't have to sit there and trade all day, because you never know when these things can slap you in the face again, right? Especially when we get in the late morning and definitely in the mid-afternoon trade. So gets a little bit more different trade, and especially on the backdrop of Powell still talking. You're not going anywhere. Like I said, you kind of see by his commentary or his answers to some of his questions that although he's kind of calming the markets down by saying, don't worry, we got a long way to go. You have to worry about nothing happening right away. I mean, there's no doubt that he obviously saw what was going on in the market before he got on. Somebody told him, hey, we're down like 60 and 70 S&P points. Maybe you should say something. Okay. I'm not surprised. I mean, I'm not surprised. Then we continue to uptick here. Again, 60 area right here is our next level. And again, if you didn't like the action around the 54, gave you a chance to get out of it because it did pop up there really quick. You're basically getting the same, it doesn't matter which way the market's going, you have to read the same. You got to look at the price action to dictate, are you going to stay in the trade or not, or how you're going to trade around it, or what you're going to do. But obviously here, since we talked about, wanting to be long around the 40 area, we kind of changed our tune here as far as, being overly sold. We're actually looking, we think actually not overly sold, but from the downside move to being a little bit bullish on the market. And that happened once we hit that 40 area and we held that 38 area. All right, now we're rotating here off of the 60 area. Got right up to 59 and change there, almost 60. And a nice little rotation. Remember how you're scaling in. We always talk about that. And, hopefully you were able to maybe get in there at the 59 and got a nice little quick rotation off of that level. All of a sudden we've gotten very strong here as the market is definitely keep your, if you're concerned about the 60, definitely have a 62 out for any shorts. I would not like be squeezing these shorts here for anything. So if you didn't take profits here against the 60, or if you didn't get in at 59 and have a good rotation, even if you got in there at 9.5, you were able to get a little bit of rotation. But again, it's hard to kind of scale in half a point above and below because of the moment. So you have to just keep that in mind. Probably as a entry point above and below the level. Anyway, even if you got a half a point, you got paid off there too, because we did get up to 575 there. So 975. Sorry. So that was a nice trade there for you. And if you did get stopped out from 54, then you did okay here with the 60 area. Again, it's just a matter of looking at the price action to help you decide how you're going to trade a level, and if it's giving you an opportunity there. Obviously, when it got to 54, kind of ran through really fast and came back down to 54. Maybe just lighten the load there a little bit, because it kind of just ran through it very easily. And usually our levels don't get run through so fast. So that kind of was an indication maybe you should have gotten out of some of them. But even if you didn't, then you should have made your money back here with the 60 area. All right. Yeah, a busy day here. Well, I don't know where to stay short. I mean, right now you can stay short as long as you're below 62. I mean, I don't know if I'll tell you to stay short below 54. I would say that you would cover them down at 50, at the 50 area if you're short. That would be a target, but you can stay short as long as you stay below 62. Pretty amazing that we, again, changed direction very quickly here. And now we're looking to the upside, but again, we're trying to keep you long there. You could have also gotten long there above 48. Next level on the upside we have is all the way up at 69 resistance. Again, above 62 out of any shorts. If you wanted to get short again, you had another good opportunity. Yeah, I mean, there's just for sure picking your spots is very important there, HD. All right, again, you can get short there as long as you stay below 62. So we have pretty much, we've probably thrown ourselves back in a little bit of a range here. Maybe. I don't know. Just saying. Well, of course, trade what the market gives you. There's no doubt about that. I never know what the market's going to give me any day, right? I will say that if I reach like a certain amount that you're content with, I would throttle it down. I would trade less. But the problem there is very simple: is that if you start trading cautiously, you don't do well. So my thing has always been trade the same way, trade aggressively, and you get to the point where you've made money, be done with it. Because if I can't just say, okay, I made so much money, I made my goal, and then I'm going to just like dabble here and there. Because every time I dabble here and there, I get myself into, because you're not as aggressive. You let things kind of go. You're laid back. You're not doing the same thing you're supposed to be doing. So trade until you've made your money. Whether it doesn't matter which way you're trading, whether you're picking your spots or however you trade, and you made your quota, and then that's it. I don't like throttling it down, because I seem to get myself in more trouble that way than I do if I just quit trading if I made my quota. Because I'm more aggressive everybody's more aggressive in the morning, right? You're more aggressive if you're made as you're trading. And then when things slow down, and let's say you made your quota, you're trying to do something, trade small, take a shot here or there, just doesn't work. It just never seems to work out for me. So, well, as long as you don't back off, that's fine. You know, I'm saying that I back off. Like I would not be as aggressive as I want to be or as I should be. You know, and then you know, instead of me trading, let's say if I traded 5 lots all the time, and then I start trading a 1 lot. Well, I mean, if it goes against me and against my rules and this and that, and because it's only a 1 lot and I don't really care about it, all of a sudden I go from having a 3 point loss on a 1 lot to a 6 point loss on a 1 lot, and maybe adding to it because it's only a 1 lot, and then I like all of a sudden I lose. You know, I'm like getting myself into I don't my mentality level is different when you for me. That doesn't necessarily mean for you, but if you're making your money trading 5 lots and you want to keep at it, don't back off, then just keep trading 5 lots until don't sit there and like I would like throttle down. I would like you know I never did that well in the pit either. I make my money and all of a sudden I'm like if I turn down a trade or if I don't want to, I got to keep trading. You got to keep trading until you're done, and then once you're done, I mean, for me, shut it down. So if you want to keep going, then keep going, but just do it at the same amount of risk and the same amount of aggressiveness as you were when you made the money. That's all I'm trying to say. I don't know if that makes sense. That's for me. I mean, everybody, but again, everybody's a little bit different, right? I mean, everybody's got a little. Some people can probably throttle it down and pick pick spots and trade small and be okay. For me, it doesn't matter. I had some of my best days when I left uh, like half an hour into the day. Trust me, I had some of my best days that way. Did I complain that it was a half an hour into the day? Absolutely not. Like again, I don't, I, I don't have a number, right? I don't have like a set amount that I'm trying to do every day. Beyond that, I just trade. I get my money. I'm good. I'm done. I'm done. I mean, like I said, when we would open at 7:20 in the bond market, and the economic reports are released at 7:30. So, we don't trade. We don't like to have positions on here when the number comes out because you get some volatility. So I didn't have any positions on when the number came out. But if you get some volatility and some movement and market moves and you get into the right trade at the right time, you can, take a lot out of the trade. And by 7:35 or 7:45, you made it your whole week. What do you think? I'm going to sit there and keep trading just because it's 7:45 and I made my whole week in 15 minutes? To me, I'm going to be here tomorrow. So what's the difference if I leave an hour or two early today or stay an hour or two late the next day? You know what I mean? I mean, to me, it doesn't make a difference. I'm not going anywhere. That's my mentality. Everybody's different. I keep saying that because you don't have to do what I do. I keep, I want you to do as a trader, as an independent trader, to do what makes you comfortable. And I'm just sharing my mindset out loud with you because you asked. But you have to be comfortable with yourself and be comfortable with what you do. Do I use RSI? No, it's a lagger more than anything else. Any indicator to me is a lagger. So sometimes you can have the RSI at below 20 or 10 for weeks, or above 80 or 90 for weeks before it moves. So it's not. It looks like it's a nice tool, but it's a lagger more than anything else. By the time it turns over, the market's already turned. What do I use for overbought conditions and oversold conditions? Support and resistance levels. I mean, do we know that they're overbought and oversold? I mean, did you know that it was going to go down to 7 and pop? No. Did you know it was going to go down to even or 10 and go up? When the market's down like 100 points, you can say it's oversold. Will it go down to 120 points? Maybe, maybe not. Again, you are just trading. If you overthink it, and if you're trying to lean on something to give you something, it's not gonna. Just trade the levels, trade what the market is telling you. And that way you'll find those oversold levels. Again, was it oversold because it was going down, or was it oversold because of what Powell was going to say or not going to say? I mean, you have outside influences today. So again, just trade the market. You're doing okay without trying to look at anything else today? You're trading okay, looking at levels and trading the opportunities the market gives you because of the levels? Yeah. So why are you looking at indicators then? You don't think indicators works with futures markets? Well, it's only because futures markets are moving quickly. You have to make split-second decisions. And obviously indicators are not there to give you split-second moves, at least not for what we do. Remember, you have other markets that, if you're longer term trader, and if you could buy them, or you can invest some time and effort, but you're trading futures, so you're banking on movements to make money. It's a different kind of mindset, I think, is basically what we're talking about here. Well, yeah, but leaning on indicators is not going to help you become consistent, is what I'm trying to say. Just take what the market's telling you. We had the support level at 40. We had a buy above You know, what we said above 48, you could have had a buy above 48. You could have taken advantage of that. Look what the market's giving you. I've learned that the market always gives you something. You know, you just have to be patient and wait for it. Like we did have a good buying opportunity there. So, you know, we could have gotten long there around 40-ish and had a nice ride up. We obviously had the 7 area on the downside that helped, you know, so, you know, as long as you understand that there's volatility and you have to expand your stops a little bit to take that into consideration, then you did okay on the 7. And you did okay pretty much overall, I think. So the rest of it is letting the market kind of do its thing, and then just finding those areas that will that you believe will give you an opportunity to make some money, whether you're long or short, and being patient and waiting for the market to I mean, look, we're getting movement today. We don't get this movement every day. You know, we're in tight ranges a lot of times. And so you know, your opportunity to make 30 ticks or 30 points or 40 points today is not going to be the same opportunity to make 30 or 40 points tomorrow. So, you know, you take what the market's giving you today, and tomorrow, if we get that slow trade, nothing happening, no movement, if you make 10 points, 10 ticks or whatever it is, then you have to be happy with that, right? That's all I'm saying. You never know what the market's going to give you any particular day. And you know, it's all dependent on volatility, right? You know, we start trading in tight ranges. The opportunity not going to be there, and or not many, and so you just have to take what the market's giving you that day. Today, a little bit different. Today we had the opportunity. All right. Nice. All right, there you go. So again, it's always what the market can give us any particular day. It's moving around today, so you're giving more. It's giving you more opportunity. You know, but you know, how many of those days where the market hasn't really moved that much? And all right, we got. You know, I think one day we had an 8-point range and we were up like 6 points. So you know, it's pretty good. So, but today, you know, today it's moving around. So it's offering, giving us chances. That's all we can ask for: chances, opportunity. All right. Again, we're going to have our class here at 12 Chicago time, so in about an hour and a half ish. And I'll take a little bit of a break now. And again, there's above 65 up there. Looks like we might get up to the 69. Support right now would be around the 45 area. And anything below 40, you probably want to be, well, actually 38 still, yeah, 37 still it. So get drift back down here a little bit. Seems like it wants to turn over. But as long as we stay above the 37 area, a little bit, get below 37, we could rotate back down. Get back in a bit.